Imagine a trip to your favorite fast food restaurant. Now, consider all the costs incurred by that entire fast food organization, from the president's salary down to the cost of the lettuce for the sandwiches. For management accounting purposes, we can divide these costs into two groups: product costs and period costs. Costs closely associated with the products or services are called product costs. Examples in a fast food setting are the cost of the food, the wages of the food preparers, the salary of the store manager, and the rent on the store location. As you sit there ready to bite into your sandwich, you can look around and see all of these costs. In this sense, they are closely associated with the product, that is, the sandwich, and are classified as product costs. In a manufacturing company such as DuPont, product costs, often referred to as manufacturing costs, are all costs necessary to create finished goods ready for sale. They include all costs related to production: the factory manager's salary, depreciation and taxes on the factory building, wages of the factory workers, and the materials that go into the product. In a merchandising company such as Walmart or Home Depot, product costs are the costs incurred to purchase goods and get them ready for resale to customers. In a service company such as Union Pacific Railroad or Kelly Services provides temporary employees to other businesses, product costs, sometimes called costs of services, involve labor, supplies, and other costs directly related to providing services to customers. Now, period costs are all costs incurred that are not closely associated with a specific product or service. In a fast food setting, examples of period costs are the president's salary, advertising, and office costs incurred in the corporate headquarters. These costs are not directly associated with the sandwich that you are eating or the environment in which you are eating it. In general, the most common period costs are selling and administrative costs. Examples of selling costs are sales salaries, advertising, and delivery costs. Examples of administrative costs are the salaries of the president and the controller, depreciation or rent on office buildings, taxes on assets used in administration, and other office expenditures such as postage, supplies, and utilities. The labels product and period stem from the procedure followed in reporting these costs as expenses on the income statement. Product costs are expensed only when the products or services with which they are associated are sold. For example, if Walmart sells 2/3 of the inventory it purchased during November, only the cost of the inventory sold becomes an expense on that month's income statement. The other third of the inventory remains an asset, that is, inventory, on the balance sheet. In contrast, all period costs are reported as an expense immediately in the period in which they are incurred. So regardless of how many products are sold during the month, the president's entire salary for the month is recognized as an expense on the monthly income statement. Thus, these costs are called period costs because they are always expensed in the period in which they are incurred.